Welcome back. You're watching Stock Watch this week, and joining me to unpack your stock-related questions this afternoon is Rowan Williams from Nitrogen Fund Managers. Be sure to send us your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Rowan, good afternoon. Thank you for being with us today.
Sure.
All right, it's the second day of trade of August. July was a month, but it's been a month already in August, actually, if I think about it. Let's just take a stock of what we've seen on our screens and maybe even what, we're trying to understand about the second half of 2024 where markets are concerned.
Yeah, so we have seen quite a sharp reversal in the first 2 days of August from what has been a very strong run. And I think partly that's one of the reasons we're seeing a bit of a pullback. The IT stocks have been incredibly strong. A lot of market commentators were saying that we actually, from these levels, we can expect zero returns.
Wow.
The full returns for the year, I think, have been baked into share prices. We are seeing quite a strong reversal. Those global IT stocks had baked in significant amount of expectations about earnings. So I guess there was a high chance for disappointment. And so we are seeing continued spend in AI and sometimes very high spend, more than investors have appetite for, and sometimes without the concomitant results, at least in the short term, and that's leading to disappointment and sometimes very sharp drawdown. So Nvidia down, some of the other semis down, Intel down, almost 20% of disappointing results. So the Japanese stock market rolling over. So yeah, I think it could be a bumpy ride for the rest of the year. There are also concerns that the US economy is maybe slowing too quickly, so going to move into a recession, and that trumps lower rates and rate cuts, which are expected. But I think, a slowing economy is not good for markets or investors.
And from a South African story, how do we make sense of that? We're seeing some very interesting forecasts emerging for growth. Of course, I think the GNU all priced in at this time. But what might also be the themes that we're looking forward to for the remainder of the year?
Yeah, so interestingly, the outlook for the SA market looks better. We haven't had that huge run-up. And as you said, we have seen some improvements in valuations, but not that significant. The overall valuations are still screening cheap, especially on a relative and a global basis. And I think a lot of investors are now waiting, now that we've had this initial rally in optimism and improvement in sentiment due to the government of national unity, more delivery in terms of tangible benefits in the economy and improving prospects for growth. And off the back of that, we will see further increases in share prices. So that obviously is going to take a bit of time to materialize, I think. But as we see the GNU mature and improved policy execution and just overall government execution, I think sentiment will continue to improve. Foreign investors will get more interested in the story, sell some of their more expensive developed market equities and put them to work in the local market. So, yeah, we remain quite positive over the next 12 months on the local equities front.
I'd like us to actually get onto some of the questions today because they're all actually locally facing. Let's start off with a question from Clive. Clive would like to find out, should I sell my Pick n Pay shares? Bought the stock at around 24 Rand, and I just don't know anymore if I'm confident about the business.
Yeah, so they're certainly going through a capital restructuring and a turnaround. I'm not sure when the viewer bought the shares, but the rights issue is actually finalizing now. So if he subscribed for his rights, he would get additional shares. And I think off the back of this capital raise, and then the second phase of that is still the listing of the unbundling of Boxer and the listing of Boxer, which is quite exciting because that has been a business inside the stable that's been doing incredibly well, and I think will continue to do well, more on the lower end consumer space. And so I would actually hold those shares, and the new CEO, who was the ex-CEO, Sean Summers, seems very realistic about the challenges facing the business and what needs to be done to fix it. So it isn't a short-term story, but I think there is a multiple-year turnaround story, and it will unfold. And on the basis that they achieve their objectives, the share will continue to do well from these levels.
And also just maybe based on the market, Rowan, that Pick n Pay does operate in, Shoprite, it just seems like it's so far gone, that it just would be hard for anybody to catch up there. And I'm wondering if Pick n Pay can maybe sort out its restructuring plans from just an operational perspective. Can they gain back that market share?
Yeah, so certainly Shoprite is a formidable competitor. They've been executing incredibly well, obviously with their Fresh X stores, Check 6060. So I think the core Pick n Pay business, they have a number of good stores. They're obviously dealing with some of the poor performing stores. So either they're going to close those down, so it'll be a smaller, better run business, more profitable business. And ASAP is quite a good offering. So I think they have a decent offering to compete with Checker 6060 there. So I think what you can expect is a smaller business that will stabilize, maybe not regain market share. So they're actually going to lose market share because they're going to close some of the stores, but will generate good profits and be a good investment prospect for investors.
All right, brilliant, Guy. Let's move on now to a question from Gavin. I would like to find out, is this a good time to buy MTN?
It is a good question, because is it ever a good time to buy MTN? So what we are seeing, though, is the share price is significantly depressed. It's at multi-year lows. And I think some of the issues that have been plaguing the African operations are moderating and stabilizing. So MTN Nigeria has had a very challenging period because of the devaluation of the Naira. So there is the prospect for increased tariffs, because they've had very high inflation, so they need to increase their call rates and their data rates, which does look like it's going to come through. It's taken a little bit longer than anticipated, but it seems to be at a bottom, sort of at a trough. MTN Ghana is actually doing fairly well. The prospects for the fintech business continue to look fairly good in Africa. So I think you are getting in at a much more realistic level, and probably has got reasonable prospects for returns around the 75 to 80 Rand entry price. So it probably is worth nibbling at these levels.
Also, it's interesting, at some point with MTN, Rowan, there'll be a spin-off of that fintech business. That might be a good place to be.
Yeah, so that, I think, has been what has been one of the sort of positives of the investment case, but I think that's taking a lot longer to manifest itself. Investors sort of have cooled on the whole sort of, just the fintech opportunity, and it's quite hard to decouple from the underlying mobile business. So I think that is a longer term story, maybe a 5-year story. So you have to be patient and be realistic about the potential for value realization there.
Moving on now to Simon's questions. I want exposure to a company that will benefit from the shift in EVs. Happy to be in it for the long term, but what's my best bet? And they ask if Sibanye might be that bet.
Yeah, so the hype cycle has been incredible in the EV space. We've seen, obviously, the major EV manufacturers, sort of particularly Tesla, being the poster child of the sector, soaring and now coming down to earth. As sort of the realities of expectation of demand for EVs moderate significantly. So I think BYD in China is likely to be the biggest player. So they're probably still a good bet if you're looking for a global player. Sibanye is interesting because they are sort of a part of their business is obviously positioning themselves to be a supplier into that space. Although the platinum business has significant challenges, so that is still a big part of the overall proposition. They do have a little bit of gold, which is actually doing quite well. So I would look for more pure plays. Maybe some of the traditional ICE, the internal combustion engine manufacturers, Stellantis actually has come down significantly, and but has a good portfolio. So this maybe an interesting entry level that you do get exposure, some exposure to EVs inside the overall portfolio at a much more reasonable valuation.
And staying with vehicles there, Tulani says, I really wish I had bought We Buy Cars when it listed. Have I missed my opportunity, or can I still get it now?
Yeah, look, the share's trading, and you can buy it whenever you want. I guess are the returns still in the share? It has done well. I think it is a very well-positioned business. They are modernizing, changing the way that people buy secondhand vehicles, and given how vehicles are manufactured, they have much longer lifespans. The secondhand vehicles offer a lot of value. And so I think the returns are probably more around 15%, maybe at these entry levels in terms of the share price. So you could watch it closely, maybe get an initial stake. And if you see some share price weakness, add to that position. So it's not as appealing as at listing, but I think it's still a worthwhile investment.
And then the one that's also, I think, been rocking me, Rowan, Quantum. What is happening with Quantum? It is a question from Anonymous, but I think it's just an important one to try to take stock of at this time.
Yes, yeah. So Quantum is an interesting player. They mainly are providers of eggs. So part of the poultry value chain, and what you are seeing is Country Bird Holdings, which is a unlisted poultry supplier, taking a fairly significant stake and getting very active. They want, I guess, Quantum sees the approach as hostile, and so has been rebuffing this Country Bird's approaches for board representation, and that's creating, a lot of shareholder friction. And they have called a special annual general meeting. I think they want representation on the board, Country Bird, that is. And so I think there's a lot of speculation about a potential taker. That's why the share has moved up significantly. They are buyers at these high levels as well. But I think you need to see some, just détente in this impasse. I think to get a clear idea of what will happen, because if it remains hostile, a bid may not materialize, which means that bid premium could come out of the share price and it could move down from here. So I think it's worth watching developments. And if you see sort of improvements in the relationship between the shareholders, that may bode well for a potential offer.
Another question coming in here, I think now at this time, also from Anonymous, then segueing perfectly from that one, Rowan, Rainbow, Astral or Quantum, if you're looking at a poultry play?
Yeah, so I think actually Rainbow is quite interesting. That is sort of a newer stock because it's unbundled out of RCL. So you're getting the pure play Rainbow business. Has been sort of a serial underperformer inside the RCL stable. But I think as a standalone business that will focus on the poultry issues, they've also got new management. So I think they have the best prospect of improving returns. The others are good, but I think Quantum's too expensive, and Astral's a big player. So if you want something that can move the needle, Rainbow's probably your best bet.
Another question coming in here from Deirdre, I think, asking about Woolworths and what you make of the stock. It hasn't performed as well as I had hoped. What do we make of Woolworths at this time? I think, I was surprised actually just to see how much strain it's taking.
Yeah, so it has been somewhat of a disappointing investment. We all like Willies, we like shopping there. We think they have an amazing food offering, which actually does incredibly well, gets market-leading returns in terms of margins, return on capital. But they've had sort of ups and downs in the FBH business, the clothing business, where they've sort of had execution issues. They fixed them. They got better market share, but now the margins are under pressure. I think the worst of Woolies is behind it. The new management team is doing well, executing. Obviously, the consumer has been under pressure, and we are seeing that in just the top line growth. The Australian consumer under a bit of pressure in the Country Road business as well. So, but because it's lagged, I think it has a lot of potential for recovery, both in terms of operating performance and share price performance. So it is actually looking quite interesting at these levels to enter and maybe pick up that sort of retailer exposure that you may have missed in the other stocks that have run already.
A question I've asked Rowan about Woolworths, and I've heard some analysts say not really the best way for them. Unbundling the food business, because that's, of course, the best part of it at this time.
Yeah, so I think the issue is because of the proposition, the ways the stores are structured, the two businesses are quite tightly coupled together. There is the potential they could probably split it, but it would be quite complicated and would require separation of leases, etc., splitting space. Quite complicated. I think they'd rather try just fix the clothing business and make it an attractive proposition that way, as opposed to splitting the business apart. But maybe if they continue to struggle, that strategic option would be back on the table.
And then the last one, and that one's from me here, Rowan. I want to maybe get your thoughts on AB InBev, what we've seen. Numbers emerge there this week for the second quarter. Not quite the demand that anticipated, but doing okay here at home.
Yeah, so the beer portfolio actually in South Africa and Africa looks like it's doing quite nicely. Remember, they had that huge misstep in the US, which is a massive market with Bud Light, and they lost significant market share. That looks like it's stabilized, but at a lower level. So I think that's hurt the business. And it's always been expensive, I guess, from a valuation perspective. What we're also seeing is these global consumer brands coming under some pressure. Consumers around the world seem to be trading down and moving away to some extent from premiumization, and that's impacting their margins. So even though input costs are coming down, there is sort of top line pressure and some margin pressure. So we think it's still too expensive at these levels, just given the sort of the earnings growth prospects at the moment.
Thank you for that one, Rowan. Let's get your stock pick for this afternoon.
Yeah, so we like Momentum. It's a local financial services firm, insurance and savings, and the share has been doing well of late. We have seen a pickup generally in the life insurance valuations as the prospects for financial conditions in South Africa improve, lowering bond yields. But importantly for Momentum themselves, they have set themselves a very ambitious strategy, what they call their impact strategy, to improve their earnings significantly into 2027. That's by bolstering distribution, their space, their market share in the wealth management space, attacking some of their costs, improving the insurance business, and then also improving returns in their Indian operation, which is in medical insurance. So I think all those things taken together with the prospects for better growth in South Africa make it an interesting investment opportunity.
Well, Rowan, thank you for a great chat. Thoroughly enjoyed our conversation today. Thank you for your time. Have a great weekend. That was Rowan Williams from Nitrogen Fund Managers.